we've got a lot to cover tonight. I want to touch on these topics. I think rather than going into loads and loads of detail, I think it'd be good for us just to touch on these and discuss them, and then we can obviously come back to them as we need to. So I've been kind of keeping an eye on the questions that I'll be getting quite regularly in the group. So we've had questions around ISC and MSU, and I think there could be a few bits missing from the video course that we need to go through. We'll talk through a little bit about EPA. I think most of you are pretty cool with EPA, but there's a little bit of talk that we need to do around imbalances. We'll run through some imbalance stuff for you as well, Yuri, so that you've got a really clear understanding of imbalance and how it works. And then I'm going to talk you through the simple reversal as well, which we haven't really... There's lots of things that obviously are really ingrained in my head that naively I expect to be automatically ingrained in your guys' head, and I have to remember sometimes that, you know, some of you have, you know, a lot less experience. So if there are any things that aren't making sense in any of the course videos, or any things that you want to, I don't know, have a bit more of an explanation on, always feel free to reach out to me, and I'll always make sure that we cover it off, okay? I don't want you guys ever to think that any question is stupid or dumb or unwarranted. I'm welcoming always all of your questions, even from you, Yuri, because you are like the question king, and I love it. I love it.
I have to squeeze the max out of that £50.
100%, 100%. That's what I'm here for at the end of the day. That's what I'm here
I'm
for.
joking. I'm just so curious about everything
It's
that
good. It's good.
I can't. And the thing is, I can't wait. I don't know. I've got this like I don't know. I've just got this personality that I can't wait
No,
for
that's
to,
the same.
for tomorrow.
You're
I need to.
obsessive. You're
Yeah,
obsessive,
yeah.
and I love it. I love it. Because, you know, asking those questions is where you find the progression. You know, it's in those difficult questions that you find that progression. So, yeah, it's good. Good, good, good. I'll come back to this trade in a little minute. I just want to talk through some ISC MSU theory, just to give us a bit of a better understanding. So I'm just going to use this example just because it's a nice clear one. So, okay, so we have had our morning session here, okay? If any of this doesn't make any sense, please tell me, okay? So morning session has cleared out an external liquidity point. Everyone cool with that, yeah? We've got an external liquidity point here. Why is it external? Because it's the highest high in this leg up before the pullback that created a new higher low. So that is our external liquidity point. I think we're all pretty okay with that, yeah? Cool. Thumbs
Yes,
up?
right.
Yeah,
Yeah.
all cool, 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 cool. Okay,
Yep.
so external liquidity's been swept, okay? This is quite a good example, actually, and I'm going to use this one exactly, and it'll be a good one to reference back to. This is not an ISC. Can anyone tell me why? Anyone tell me why this is not an ISC?
No imbalance, no impulsive move away.
No imbalance, no impulsive move away, okay? So we want to make sure that the ISC is impulsive move, that it's clearly taken liquidity and then immediately rejected, okay? That's how we know that we're dealing with an ISC. You are going to get some moves, you know, all the time that look kind of like ISCs, and you've got to do the testing and you've got to understand whether or not you want to take them. There will be sometimes trades that maybe I take because I'm really confident in all my other factors, all my other confluences that may not meet the strategy absolutely perfectly. But again, that will come with time and patience and just experience and confidence. There'll be some trades I know because I've you know, we've had it even recently where you guys are like, how have you got into that? It's ended up being a winning trade. It hasn't quite met the checklist that you were looking for, but I know based upon how EU moves. Remember, I've traded nothing but EU for 4 or 5 years now. EU has always been my consistent pair, so I understand it really, really well. Sometimes I will blur the lines a little bit, and that's okay as long as you've done that testing and you know that, you know what, if you get 5 out of your 6 checklist points met, then that's okay. You can take the trade. In the early stages, if you're still struggling, if you've never maybe passed a prop firm challenge, if you've maybe not found your... Excuse me, I shouldn't have drunk a Diet Coke before this. If maybe you've not found profitability or even some profitability, if you are really kind of in those early stages where maybe you are constantly at losses, I would say stick to what I would class as the A+ grade setups, which is every criteria met. And that may mean that you take a few less trades, but those trades that you do take will be obviously better trades and higher probability trades. Okay, so
check on this example. Don't you have an imbalance on the 3 minute?
you may do. I'm just using the 5 minute because it's really clearly illustrating the point that we're discussing. So you probably do. Okay. Yes, there is an imbalance there. And if you'd taken it on the 3 minute with your MSU there, you, depending on whether you see that as an engulfing, you might have been stopped out. So you might have been unlucky here. I'm going to stay on the 5 minute because it kind of illustrates the point. Okay.
Yeah.
So ideally, you want the ISC to create a move which generates a break in structure. Okay. That's the ideal scenario. So the reason or possible reason why this has failed and that high has been swept is because the liquidity that's taken from here has not fueled a big enough move to take the price from this ISC, which is rightly so a ISC on the 3 minute time frame, not fueled the move to take it past this last low that was created. Okay, we do whilst we are not structure based traders, there are certain elements that should be almost, what's the word I'm looking for? That should be compulsory. So seeing a change in structure and a changing the momentum, that should come naturally. And possibly, I need to go back and double check, but possibly this wasn't explained well enough in the ISC MSU video. But in order for us to confirm that we are reversing in any marketplace, if you've got any kind of structure, you would never just take a trade from here, would you? Regardless of liquidity or anything else, you would never enter a trade like this, okay? Because you have no clue whether the price is going to continue down or whether this is just going to be another pullback for another push up. So possibly what I've done is one of my ISC MSU videos, I've not explained fully that your ISC should always break some sort of structure to the left, okay? And if you drop down to the 3 minute time frame and look at this again, you'll see that there is no structural break. Now, how you want to understand structural breaks is really up to you, okay? A structural break, you could say that every single one of these candle lows is a structural break, and therefore you've broken structure. I don't like to work like that. For me, whilst there are internal structure breaks, I really like to see a clear and obvious swing point. I don't have science behind clear and obvious swing points, but I think you could probably all agree that that is a clear and obvious swing point, whereas that is not. Although there is an up candle here, that yellow or that orange candle, down candle here, that orange candle, that to me isn't a swing point. If you did want to put science around it, what you would be looking for is 1, 2, 3. That would be your down candle of the swing point, and then 1, 2 either side. So either side of it, you have 1, 2 candles above, 1, 2 candles to the right above. That then can be, if you want some science around it, that then can be your swing point. The problem with that is that you get them everywhere. You've got one there, you've got one there, you've got one here, you've got one here, you've got one here. So for me, I like to use them when they're clear and obvious, and I like to make sure that it's at the bottom of a run. That's a swing low, that's a swing low, that's a swing low. All of these here are technically swing lows based upon the science. So, you'd be constantly drawing out swing lows all the time. So for me, what I'm saying is I want my swing lows to be really clear and obvious. And if I'm looking for a structural change to take this low, I need one of these to be swept. On the 1 minute time frame, what do we get? Let's see if we get it any. Where have we gone? Have we gone too far? No, see if we get it any clearer. So even on the 1 minute time frame, it depends on where you see structure. I would see that as the structure. That's not structure. That's not structure. Now, what might overrule this and override this is, let's say I had this move, for example. Let's say I had this move here and it was really impulsive. I might still be keen to take this and then use internal structure as my structural breaks. So it depends on so many factors. And, a lot of this is, you'll learn through your testing. These really big impulsive candles tell me that momentum has come into the marketplace. It then continues down, and obviously we then get our MSU set up on the 5 minute time frame. But this move here has not really been impulsive. It's not cleared any clear structural for me, so I wouldn't be jumping to that straight away. If that, however, happened here, I'd be more likely to get into that marketplace, because that big impulsive candle with lots of imbalance left in, that for me tells me we've got some real clear momentum. And this is where jumping around on a few different time frames can really help you understand whether you should or shouldn't be getting into the marketplace. Yes, the 3-minute ISC is correct and valid, but this setup I wouldn't say is a clear MSU. We haven't taken any structure to the left, so I would be nervous that we might be seeing this as a sweep, which ultimately we get here. Now, with the greatest of respects, if you had entered here off that MSU and then got stopped out, you can get back in really easily anyway. It's okay taking 1R as a loss. That is going to happen sometimes, as long as you're ready for the fact that actually you might get a second move. And you know, this is when then you start putting these things in your journal, start noticing patterns. Maybe this happens to you more often than not. So do you then factor these in? You know, it's so much of trading and becoming profitable in trading is conditioning to just understand what's happening based upon your chosen pair. And that's when I come back to the fact of we really need to be picking a pair. Now, those of you who are trying to find that profitability, you need to be picking one pair and sticking to it. Master that pair, master the ability of getting 2R out of that pair regularly. If you can consistently get 2R out of one pair, you then need to decide whether you need to add in any more. 2R once a day, 4 days a week, 1% per trade, 8% if you've won every trade, 4% if you've only won 50% of them. You've got to understand that the power is in the numbers, and when you start scaling up to $1 million accounts, 4% a week or 4% a month is a pretty fucking amazing pay packet. So I think most of you will probably get to where I was, where you have this need and desire to trade lots of pairs, but actually when you realize that trading one pair can earn you just as much money, if not more, than trading 6, you kind of get to a point where you're just like, it's easier. I don't have to be on the charts as much. I'm not getting as confused as much, and I'm actually winning more. So big recommendation for any of you guys at the moment, if you're not already trading one pair, then just I would strongly advise it in the meantime. Any questions on any of that? Amazing. Good. If you have any questions, just feel free to speak up and interrupt. So we've got our valid ISC here. We then have clear structure, push down, pull back, push down, pull back, push down, manipulation, engulfing. We can then enter off the back of this. First profit target would then be at that level there, which obviously gives us our 2R, so we're happy. Okay. So that hopefully will help you get into slightly better ISC MSU setups. Okay. We've been a bit what's the word I'm looking for? I'm struggling today. It's been a very long day. We've not been spoilt with ISC MSU setups lately. There's been a lot more RTO entries, which is fine. That's why we've got the other entries that we can use. I am just going to touch very, very briefly on Imbalance, just because I know Yuri, you were talking about it, and if anyone else wants to know about it, we can talk about it as well. Okay, so an Imbalance is a candle that has moved off with so much volume of sell orders in this example. It has left an unmitigated or an untested area of price. Okay, so our Imbalance in this example is from that candle low, that candle wick there, to that candle wick there. The candles to the left of it don't make any difference. Okay, on this time frame, which is our 3-minute time frame, what's important is the fact that after this wick, price has shot down at such a speed, and whilst it has pulled back to start filling in some of those orders, there has been too many sell orders in that market, and it has prevented the price, or the algorithm has prevented, or whatever is controlling it, doesn't really matter. It has prevented, because of the volume of sell orders, price coming back up to completely mitigate these orders that are sat in here. Remember, the market is a zero sums game, okay? Everybody has to be a winner and a loser at some point. And so all of these sellers, okay, those orders have to be met. These orders have to be met over in the exchanges and various other places. So what happens is the pullback usually, when we talk about EPA, so we're talking about price creating areas like this, we want price to come back in. This is exactly what's happening on those candlesticks, okay? If price didn't do that and push down further, okay, let's say this is on the 4-hour time frame, that there becomes an imbalance, we have a liquidity void. We have an area where there is only sell orders on this particular time frame. That's really important because imbalances are based upon the time frame you are on. So when we're looking for EPA, the reason why we're looking for EPA, where's my thing gone? Where's my tool gone?
No.
2 seconds. Nope. There it is. Right, when we are looking for EPA, okay, the reason why we're looking for EPA is because we're looking for that area to become efficient again, right? Everyone's watched the video on that. Everyone should know what that means, okay? We were looking for that area to become efficient. Why does it need to become efficient? Well, because the market is drawn to these areas because this section here, this void in price, is full of sell orders. Those orders have to be satisfied in order for whoever has placed those orders to be liquidated, if that makes sense. It's a difficult concept to get your head around, but just trust the theory on it for now, is that when you see these imbalances, they're exactly the same as why you get an EPA. The market needs to become efficient. Those orders have to be filled. What it does is it closes off negative positions, it opens up new positive positions, and then once that's been completed, the algorithm has the fuel, the liquidity it needs to continue down on its path. The same principle applies with EPA as it does with imbalance, okay? These imbalances, you will see that wick came up perfectly into there. It's come into that imbalance. It's taken almost all of the area and then it's immediately rejected. Okay, so we use them as ways to indicate that there is mass orders in the marketplace. So in this example, okay, this goes back to what we were discussing about ISC theory. In this example, we've had this huge voluminous bearish candle here. Okay, what that tells us is that not only has this manipulation been effective because the speed at which price has turned around and pushed down and then taken out, this is where we stack those confluences. Manipulation of a manipulation, huge move, big imbalance left behind, which on the 5-minute time frame is here. You notice how on the 3-minute time frame our imbalance was that? Yeah, on the 5-minute time frame, our imbalance was this section here. This is why we say imbalances are relevant to the time frame that you're on, and they will vary. Okay, so it's that on the 3-minute, it's that on the 5-minute. They're both valid. They're both valid based upon the time frame that you're trading. What you can do on the 3-minute is obviously you can then tighten that up, and then you could have got yourself into a really tight trade if you wanted to. It's one of the things that you'll need to test out. Okay, what we're saying is that we've got our manipulation of our manipulation. We have a big move down, imbalances left behind. We've then broken structure to the left. Not just that, but we've also cleared out the Asia low there, which is fantastic. And then price is drawn back up in a really slow, corrective manner, back into our area. We get our engulfing, our MSU, and we enter off the back of it. So we then got multiple confluences to indicate we should be trading. And the imbalance shows momentum. Okay, does that make sense for everyone? Is there anything about imbalances that you'd like me to go through in any more detail? Cool, we're doing well.
Check, sorry. The only thing that I would say that you only see occasionally is where you get like an imbalance, but as the candle prints, it doesn't produce a wick, and then the next candle starts with no wick, and then it just keeps going down. So I guess that would just be considered as one big imbalance because there's no wicks.
I see what you mean. So I would, in that example, I would drop down to a 1-minute time frame and see if there is a better imbalance. I think ultimately what you've got to look at is that in moments like that, I mean, let's see. So the 3-minute time frame, you've got these wicks here. It's quite rare that there be no wick.
Yeah, I was just trying to find one because I'm sure I saw one like the other day or the other week, and I was like, what? And I was trying to remember if I'd heard somebody talk about it before.
Okay, so you've got one here, but there is a wick there.
One big imbalance. Oh, there's still a wick though, isn't there?
There's still a wick.
No wick at all.
I think you're going to really struggle. I think when that does happen, if and when that happens, I think you've got to judge it on its merits. I mean, if you're talking this has happened, and then this has happened, I'm not fussed about that. I don't think that's anything to shout home about. That's just fucking two fat candles sat next to each other. I'm just a bit like, whatever. If, however, that happened and it was after news, I think time and location is really important, and then that happened, I may be thinking, you know what, this is one big long candle. But if that was big long candle on the 3-minute time frame, you could probably go to the 6-minute time frame and see one big long candle. So it probably wouldn't matter too much. I wouldn't stress about it too much. All we use them for really is momentum and magnetism. Okay, we're looking for momentum to show us that we are trading in the right direction, and then we're looking for price to come back to them. It adds a confluence and a reason for price to return back to that order, that original order, so that RTO setup or MSU setup, whichever setup that you're using. Hint, wink, wink, they are basically exactly the same, just bigger and smaller. As long as you are utilizing them the right way and understanding the reason why they're there, that's what's most important. And I think that's really important to understand the reasons why imbalances happen and the reason why imbalances are printed, because they normally always create a reason for price to return to the original order, whatever that original order is. They might not be, tagged exactly at that moment, but you're going to find that they are usually always going to be filled in one way or another. And eventually price has to, it does not have a choice. Eventually price has to come back there. Okay. See how our Euro USD trade is doing. Okay, so when you're looking at this trade right now, where Euro USD is right now and where it's likely to get to, well, if you weren't fussed about risk to reward, you've got two really valid reasons here to get into Euro USD right now. Okay, it's a shit area because you might get pullbacks, but I firmly believe, although we've had this push down, I firmly believe with overall structure, the likelihood is we're going to take out that liquidity and fill in this imbalance that is still left behind. Okay, because it has to be filled in at some point. It doesn't have to be done straight away, but it has to be filled in at some point, because there are people right now in negative positions and there are people right now in positive positions that needs to be settled, and it will be settled at that point. Okay, imbalances will always get filled eventually, just might take a little bit longer than you'd like.
On that then, Chet, what do you think about the imbalance left last Tuesday? So that is below the low that's just been printed.
Last Tuesday?
Yeah, so you probably want...
Tuesday 20th?
Yeah, down there.
Is there an imbalance there?
Yeah.
Actually been filled on a lower time frame.
Well, this is part of higher time frame structure now, isn't it? Let's get rid of all this shit. Okay. So yeah, we've got an imbalance there. Okay, which would be there to there.
So it's below the low of our range that almost got swept, but it didn't.
So until price tells me very, very clearly it's going bearish, I'm not fussed. Now, that would be considered in some areas a bearish chart, change of structure, whatever you want to look at it. Okay, I wouldn't class that as a change of structure right now, and I'll tell you why. If I draw up my structure points, and if you're ever struggling to understand your structure points and where your ranges are, do this, okay? Draw an obvious low to an obvious high to the next obvious low at higher low, and then when you stop being able to break one of these, that's your range.
Yeah.
Okay? So when you're in a position where you can no longer break, so you've acknowledged that that's the high, you've acknowledged that that's the low, when you're in a position that you can now no longer draw any more lines because they are intact, that's the range that you're in. So for me, I'm not bearish until that external level has been clearly broken. And for me, I am bullish until that happens, which is why I'm a bullish bias. I'm going to get into bull trades quicker, and we'll come on to today's trade because it's a perfect example of the final point I want to come to. I'm going to get into bull trades quicker because why the fuck wouldn't I? If I look at this price action, okay, we've been bearish, okay, bearish. Then we had a really clear change of structure. So we had this initial false move. That false move was manipulated. Then we had these kind of bullish pullbacks, which were really mucky, and a few of us struggled with that a little bit because we were expecting sells. But then we had this really clear change of trend and direction. So that now for us is our true breaker structure, and we're going to get into that all day long. Is my line not working? Not working.
I guess for me, it's just that's quite a large area of imbalance. So I know what might want to continue bullish, but I'd be thinking, does it just want to come down, mitigate that, and then continue? Because like you say, it wants to achieve efficiency.
Yeah, it might do, but it's achieved efficiency. So the most important thing that price wants to do is to make sure that, so inefficiency and imbalance, you need to understand there are two slightly different things, okay? So when the market is inefficient, it has to make that area efficient again, okay? It can't move back up and start fueling moves to the upside until price is made efficient. So it hates being efficient more than it hates imbalances. What it does often in the meantime is it covers off both. Once it's been made efficient, which it did at this line here, okay, my wick doesn't
because
come
you're
up.
saying that there's like an EPA that is tapped and then it's gone
Yes,
back up.
and that's why so that area here that is now untested, yes, at some point it will be filled, but it doesn't have to be anymore. There's only one reason why it might do that, and that's just the imbalance. The only reason right now it would come down here is for the imbalance. And remember, you know, you've got to look at it sometimes like a maths equation. There will be multiple reasons for price to come back, and all my things have disappeared. They all say liquidity. What is going on here? What has happened? I don't know. Anyway, yeah. So this is what we talk about stacking complemences, and it works in terms of magnetism as well. So price needs a reason to come back down here. Okay. At the moment, the only reason is the imbalance. Is there any clear and obvious liquidity? Well, yes, we got some liquidity on that line, so that could be a reason for us to come down. Is it more sensible for price to come and take this liquidity? Well, probably not, because it's so high up. Remember, in order to come all the way down here, that takes a lot more fuel and energy than it does to come up here.
True.
Up here, okay? And then when we look at key liquidity levels, we've got a major level here. So the likelihood is before it does take this out, and what this will then be used for is an area when we then decide to take all this trendline liquidity out and all of this trendline liquidity, because it might give us another point on there. First things first, it's made all this effort to come all the way up this high. It's pushed up here. It's taken out our range liquidity, which was that little level there, and then it's rejected massively. But despite that, that rejection is very similar to what we looked at earlier, remember? That rejection was not powerful enough to break this structural level. So let me just tidy this chart up so you can see it a little bit. This structural level here, I'll put it in pink and massive so you can see it. That structural level here was not broken. So this now becomes a weak area, because if that was the move that was going to fuel us changing structure and coming down like this, it would have broken that level, which is our range low, or our external level of our range, okay? So the likelihood is, in the most probable play now, is that we're going to continue pushing bullish until we take out that level. That level there, I would reckon, is probably then going to fuel a move to come down all the way down here. Make sense?
Yeah, I'm with you.
Yeah?
Yeah, it makes a lot of sense.
Cool. So, and look, I could have gone through all that analysis and thought that, you know, I've fucking nailed it, and it could do the complete opposite, okay?
Yeah, exactly.
So what it's really, and we talked about this quite a lot in the chat recently, what you've got to really try and get out your habit of doing is predicting what the market is going to do, okay?
Yeah.
Although that is my forecast and that is my analysis, I'm ready for anything. So, if price does this to me overnight, I will sell it when it gets back into an area within the premium. Okay? What happens, and the reason why you guys sometimes lose money, is you see this happen, so you enter like this, and you're like, oh no, it's taking me out. It's taking you out because you've rushed the trade. You've got your FOMO'd out, and you've taken the trade incorrectly. So it's really important. It's really important to understand that if the market doesn't do what you expect it to do, that's okay. You haven't missed the move. Okay, look at all of these moves. None of them were so big that you couldn't have made some profit. I even got into that one, if you remember. That was the news move. Do you remember that one? I was in IKEA at the time, and I was messaging you guys. I got the move in here, and I took like 1.7 out the marketplace. I was happy with that, because that was Friday afternoon, start of February. You know, no move will ever go on forever. Okay, at some point that move is going to reverse, or do something, or give us a signal that we can get in. The important thing for you guys to do is that if that happens overnight, and it takes fucking 5 days to get back up here, two things can happen. You need to understand that it's going to take 5 days to get back up there because it's such a big move, and you need to be starting taking short, sharp, sweet entries, buys coming in and out of the marketplace 2 hour at a time until you get to this equilibrium level, okay? When you've reached that equilibrium level, you probably want to sit on your hands and just wait and see what price does. And this is outside of kind of normal structural stuff. There's so much that you guys need to learn, and this is the fucking unglamorous side of trading that no one ever teaches you, because this shit is really difficult to get your head around and to really grasp. There's certain times you should and shouldn't be trading. You might get a perfectly valid trade here, but if that trade only has a potential of going to 2R and it might not get there before it reverses, I'm not interested in taking that trade, even though it might be a fucking perfect trade that has every single confluence met. For me, trading like that is probably not worth it. And what I definitely wouldn't do is take a trade like that, even if, again, it looks like absolute gold. So these are things that are really subjective. And I think a lot of the time we want the rules to be really clear cut. Trading isn't clear cut. If trading was mechanical, and if trading could be, reduced to a scientific formula, if X happens, do Y, then trading wouldn't be difficult. Someone would have worked out that formula. It would be printed on the internet, or AI would have worked it out. The reason why AI trading doesn't work and will never work is because the algorithms and what controls the market ultimately is constantly changing all of the time. Okay, all it's after is orders. And there's a Greg Secker at the moment is promoting his AI bot. Okay, that guy just sells whatever shit he can do. If there was AI trading available, then the market will change. Why will the market change? Well, it will change based upon liquidity points. It will start, and we'll be ready for that, because our strategy teaches us to take trades at certain liquidity points and after certain reactions. And this is why this works so well. So there's so much that you're going to learn over probably the next year that is subjective, interchangeable. You might agree with, you might not agree with. My learnings are my learnings. They work for me, but they might work slightly differently for you. What I want to do is empower you guys to have a really clear mechanical strategy that will work around normal market conditions, and then you've got to take that and then you've got to adapt it around actual market conditions. So it's these things that become then quite complicated and can cause confusion, and you're like, but I'm doing this and it's not working, I'm doing that and it's not working, and that's probably one of the most difficult parts about it. All I can say to you is this: trust in your back testing. Keep working. If you find that you're taking more losses than you want, then just wait, okay? Wait for external liquidity points. A good tip whilst you're working in the early days is wait for only external or premium or discount. So if you're pro trend, only ever take a sell from premium, okay? Pretty self-explanatory. If you're not pro trend, only ever take trades from the external liquidity, okay? And that way you'll definitely get into better trades more and more and more. I'm really sorry, guys. We have run out of time. So I'm going to stop this recording, get it all boxed up, get it on the channel. I want to do another one of these either Friday or Saturday, because there's other things I think we need to go to. If there's any questions that come off the back of this, can you please put them in the channels, and I'll either record a separate video or we'll cover them in the next topic. We've got 120 seconds left. Does anyone have any questions before we go? No? There we go.
Okay.
Perfect. Successful webinar. As always, any questions, give me a shout. Good luck to you if any of you are in the Euro USD. Let's see if we can get my profit target. Profit target for me is just there. So if we get it, great. But yeah, love you all. Cheers, guys. Catch you soon.
Cheers.
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 Cheers. Thanks.
Anytime.